There's a whole process that you have to walk people through to get a certain level of comfort with yourself, then a certain level of comfort with your products, and then lastly, a certain level of comfort with the company that you work for. Somebody can love the company that you work for. If they don't like you, it doesn't work. So you need three parts, right? They've got to like you, they've got to like the company that you work for, and then they have to like the products that you have. But it requires two human beings sitting down, talking, sharing information, and developing that trust between them.
Hey, welcome back to the Real Estate Excellence Podcast. I have an amazing guest today from the great state of Michigan. He has been in the mortgage business for over 25 years. He has worked with some of the best in the industry. He has seen the ups and downs of our industry, and I hope to dig into the market predictions today. Ultimately, however, I want to learn more about what he is doing with his new company as he consults mortgage brokers, guiding them through the ever-changing business environment. He is a coach you want to have in your corner if you're looking to open your own mortgage shop, or commonly known as a brokerage. Let's welcome the extremely knowledgeable founder of the CEO 1440, the mortgage broker builder, John Jurkovich, to the show.
Hey, thanks for having me, Tracy.
John, really excited to have you on because obviously things are changing. Where it's going to be, I think, a survival of the fittest, I guess, if you want to say, over the next, who knows, 12, 15 months. Hopefully it doesn't last that long. But, one of the things that's going on, I was just pulling up some articles, different industries are laying off, which I want to dig a little bit of what you're doing as lenders are laying some experienced loan officers off. That is actually business that leads into kind of what you're doing today.
Yeah, 100%. So we've seen a lot of just constriction in the mortgage business, but it's also on the back end of, right, COVID, the whole massive balloon. There was just a glut of people that got into the industry. So some of that runoff is just maybe because it was overly inflated, but it's definitely a lot harder today to go out there and generate and just make a living doing this. And you and I both know, right? Like 2005 was pretty easy. 2006, 2008 was pretty damn hard. So we're just seeing that cycle repeating itself, and maybe a little bit more vicious this time.
So just a little disclosure, John and I overlapped a little bit of time at then Quicken Loans, of course, now Rocket. Of course, you actually started with Rock Financial in 98, if I recall. So I want to kind of kick us off, just kind of, your background, and then what led you to Rock Financial in 98 and getting into the mortgage business?
Yeah, that's an interesting question. So I have a degree in exercise physiology. I was a personal trainer at the time, wanted to go off and sell pharmaceuticals, and went and started interviewing and was told repeatedly that I didn't have sales experience. One of my personal training clients was at Rock Financial, was very successful, doing well, and said, "Hey, John, why don't you come sell mortgages for 1 year and get that sales experience you need? You have to personal train me for like free or a reduced amount. I don't recall exactly. And at the end of a year, you'll have your sales experience and off you go and, go and do your thing." Wow, that was almost 26 years ago. And needless to say, I never left. So mortgage gets its claws in you and you're kind of stuck.
What was the mark? I mean, you probably remember what the interest rates were when you first started it. And in Rock Financial, I mean, you were out, you're out as a retail mortgage lender, right? Beating the street. That they didn't evolve into the Quicken call center yet. Am I correct?
At that time, what is now Quicken today was a thing called Mortgage in a Box. And what that was essentially was a coloring book that they would mail out to people, and you would fill out a mortgage application via a coloring book. People would mail those back in, and then people would fill that out, and somebody would get on the phone. Jay Farner, who was ultimately the CEO, ran that little team of people. I think there was probably 10 to 20 people in that division at the time. That's what became Quicken Loans. But no, I was out knocking on doors, talking to real estate agents, 100%, just a retail loan officer inside of a company. We did advertise every Sunday. They bought a half-page newspaper ad in the Detroit Free Press. And that was the extent of what they did. They mailed out coloring books and a newspaper ad.
And I'm going to ask this question several times through because you have a very detailed LinkedIn. Your experience is vast in our industry, doing a bunch of different things, from leadership. And we'll talk about processes, because that's one of your big things that you are consulting on in creating a process to success. What are there things that when you're out consulting today, what are some of those things back, those 1998, early 2000s that you still are foundations to success in the mortgage business?
Well, I think that there's just some key sales components that will never go away, right? Asking for the business is right. Like that's always a key component. It doesn't matter what kind of, fandangled point of sale there is, what kind of widget you have on your phone. You've still got to go out and actually ask for the business. And I think that people have moved further and further away from that. So that's just one, underlying thread. And I think that customer service is always king. So being able to go out there and being passionate about delivering a 5-star experience every single time, if you can nail that part, right? So if you're super passionate about delivering an experience, all the rest of the things kind of fall in line. So if you don't take shortcuts on the experience, the rest of the stuff kind of falls in line. And then beyond that, it's just, you see all these tech solutions that tried to fix everything. You still have to be first of mind, top of mind when somebody's ready to do that transaction. Hence the reason you do this very show. It's not to write a loan or to get something instantly. It's so people know who Tracy Hayes is and what you're doing. So when they are ready, could be 6 months from today, you're top of mind. So I think that those three things still continue to resonate. And we've seen tech and a lot of things come, miles, but it's still the basic premise of two human beings talking to each other. Trust is established. There's a certain level of certainty that happens. And once somebody trusts you, they feel pretty certain that you can deliver the product, they will do business with you.
Yeah, as always, I've got my questions here on my screen in front of me, but I know there's a lot of stuff between the lines. And one of the things you speak about is asking for the business. And I think, and I assume our immediate, as retail loan officers being out on the street, we're talking to real estate agents. We're trying to gain their business to get that referral, because they're generally the point person when dealing with a new home buyer situation. When you're break it down simply, because I think, I listen a lot to Carl White and have, coached by what they do at the Mortgage Market Animals and so forth. There's, I think, a gap between going out and building a relationship and really, as Carl says, a lot of times on that first coffee appointment, you don't really talk about mortgages. You just say, hey, you try to get to know each other, start building that relationship, is kind of what his team coaches. To the other side, where you, as the common knowledge, when in the Quicken / Rocket call centers, diarrhea of the mouth, where you could be out real estate agent and you start talking about buy downs and this and that and all the other things, and they're like, dude, back off. I have enough on my plate. Where's that in between in that relationship, those coffee appointments of building a relationship, you actually are asking for the business, because you do have to ask for it. It's amazing. Some people, you would think, oh, I'm taking a mortgage loan officer's taking a real estate agent out to lunch or coffee or whatever, and that we're there for a reason, because we're trying to create a business relationship. But sometimes the agents don't quite get it.
Yeah, I think that the more you kind of understand just marketing and sales, like Gary Vaynerchuk he wrote a book called that's like left jab, left jab, left jab, left jab, right hook. So, and what that means is essentially add value, add value, add value, add value. And when you add enough value, you actually earn the right to ask for the business. Mm-hmm. So you'd seem really awkward going to a coffee with somebody and sitting down and saying, I have a 1% down program. I have a 0 down program. Like, send me your next client. You've got to add value to them across the board. Explain to them the 1% down program. Let them know those things, but they don't listen until they first know you. So there's a whole process that you have to walk people through to get a certain level of comfort with yourself, then a certain level of comfort with your products, and then lastly, a certain level of comfort with the company that you work for. Because there's 3 components there. Somebody can love you. If they don't like your products or the company you work for, you're SOL. Somebody can love the company that you work for. If they don't like you, it doesn't work. So you need 3 parts, right? They've got to like you, they've got to like the company that you work for, and then they have to like the products that you have. But it requires 2 human beings sitting down, talking, sharing information, and developing that trust between them.
I see a lot of disconnect a lot of times, especially, well, you see it on social media because, it's easy to sit there and we can scroll through, whether it's different loan officers or people talking about our industry or really any product in general. But I think our industry is particularly, some people are short on this. And that's when you are talking about a program, the person sitting across you you have to realize you have to put yourself in their shoes. Where is this program going to fit in their day-to-day needs? What are the type of client, what kind of client should they be listening to? Go, oh my goodness, that program that John just talked about the other day at lunch, this might fit them. And I've in our social media and any mortgage loan officers listening, you have to keep, I call it KISS. My wife don't like that. Keep it simple, stupid. You have to actually get down and say, this is the type of client, or here is an example of how this program would work. Because there's no way for a lot of real estate agents, a lot of borrowers out there to connect of how that program, because we have so many, will work for them. Would you agree?
Yeah. And I think that a really big error that people make, especially when you see them sending out like these flat flyers, you can go on your LinkedIn, and mine probably has a certain, the group of people I attract this. So everybody's doesn't look this way. But I get the exact same flyer sometimes will show up 4 different times, about a 1% down program or a 0 down program. What I think that loan officers especially need to start conveying is that they offer a variety of programs. They can fit a certain niche, but try and stay away from explaining every one of the nuances of that program. I see it a lot in the DSCR world, right? Like you've got 1099 programs, and one DSCR lender will offer that program with it. They'll let you use 90% of the 1099 income if they're like an Uber driver. The next one, it's 50%. If you were to go through on your social media and try and outline all of those guidelines, you're just going to disqualify somebody. I'm going to be like, this makes 0 sense. I'm just not going to do it. Or if you just know, hey, you've got a client with the 1099, I've got a variety of options. Think of me, let me do the hard work on the back end. Just remember a 1099 client, send it my way. So I do believe in your KISS thing, right? Keep it simple. People try to explain how the watch is built instead of telling them what time it is.
I want to transition, into what you're, because all these things, like I said, going through your LinkedIn, building up to what you're doing now at CEO 1440, which I want you to explain. I read what the 1440 is, which obviously makes sense. I love it. Where you came up with the name, but how in your career, with your experiences built up to where you're at now, and when did you start seeing that need of, for these individual mortgage brokers? I'm sure you're dealing with individuals to, mid-size companies, 5 or 10 more. I don't know. You can tell us who you're working with, but give us kind of the background of how it built up. When did you actually see the need for this consulting service? But obviously start off with, where'd you come up with the 1440?
Yeah. So 1440 is something, I don't know where it came from exactly, but I've been talking about 1440 since early 2000s. And all that is you have 1,440 minutes every day. And it's really just about being very intentional and impactful, that every minute adds up. And throughout the course of the day, how you choose to spend things as broken down as each minute impacts your outcome for the day, ultimately your outcome for that week, year, so on and so forth. So 1,440 is just, it's a reminder to myself to be very intentional about how I spend my minutes. So, and goes back, I can't even tell you, I have stuff going back to 2003, 2004 with that moniker on it before hashtags were even a thing. So that's where that is. And 1440 was a consulting company that I've owned for a couple of years. And recently I was a chief revenue officer for a company, and I kept having people come and asking me questions like, hey, John, how do I start a brokerage? How do I do this? I'm thinking about branching off on my own. How do I do this? So I kind of started just brainstorming on that and looking at the industry, and kind of did a deep dive and said, if we go back 2005, 2006, 50 to 60% of all loans closed via wholesale channel. Fast forward to 2009, 2010, most people would say that number went from half down to somewhere between 5 to 10%. Wholesale was almost dead, right? Like the whole broker business was almost dead. While United Wholesale has just made massive strides. And you're seeing now 20 to 25% of all loans close via that channel. And it's become easier and easier for the individual like you. I mean, we had a conversation about you potentially starting your own shop. That's how we reconnected after a while. And it's just become easier and easier from a tech standpoint. So all the pieces kind of lined up to where an individual can go out there and become a broker probably easier than ever. So we have a company, the Mortgage Broker Builder. And what we do is two things. I call it B2B. And B to B, number one, is banker to broker. So that's our first thing. And we help somebody, takes us somewhere between 30 to 45 days, but we take you from where you're sitting as a loan officer today to a licensed, fully compliant mortgage shop up and running, point of sale CRM, kind of everything working, everything that you need to begin closing loans, somewhere in the 30 to 45 day range, depending on the state. But then the next business that we have is also B2B, and that's broker to better. And that's just looking at companies that, just they don't have their shit together yet. Right? They've got some of the things in place, but maybe their CRM doesn't talk to their point of sale. They're doing a lot of double data entry. They don't really have a marketing plan. They've kind of been flying by the seat of their pants, and rates into 3% allowed companies to linger there and be in business. Usually the market would just chew them up and spit them out. They never would have made it.
Right.
But there's a lot of mortgage companies that are now 2-3 years old that really never got past what I call the 6-month mark. And at the 6-month mark of your brokerage, you should have all of your tech should be lined up. You should understand your compliance pieces, your call reporting. You should have all of your automated emails set up and firing to where things happen on certain things. So you need your business running at the 6-month mark, and just a lot of companies haven't. So we can come in often and pull a couple of levers and get somebody moving at a significantly faster, pace than they would. And sometimes that involves, reshuffling tech stacks, but it's usually not that hard if you just step back and out of it and kind of take a look at it. And then we work with brokers anywhere from, one person to some places that have, upwards of 50 bankers.
I have seen, we've talked about this a little bit in conversation, but because I've seen some of these new loan officers that came in, the post-COVID, maybe they got in 19, they got a couple years, it was easy for them. And what they're looking for is the bips, right? Where they're looking for bigger commissions. Who's going to pay them more? And they're running from one lender to a brokerage. Obviously the brokerages, have some flexibility there, but I'm sure you're coaching them on like, hey, you might be overpaying for that loan officer because simply there's these overheads like the tech stack and, compliance and all these things that go on in the back end of any lending operation. But I'm seeing these really green, like guys that haven't even written a dozen loans yet, going out to some of these large national brokerages that are promising 250 basis points, 200 basis points or whatever. Are you seeing some of them come back around? Are you seeing some of them fall in front of you? Because my fear is those that are, if they're still standing, because they're out there obviously with no support when they're paying them that much, they just can't, give them the support there. But some of these guys coming around are obviously going to be falling out. Is this good for the industry, you think, in general? Are you seeing this, what I'm seeing?
Well, I think that you have, essentially there's, right, where you go and you work and you're a pure W-2 under someplace like a Loan Depot, right, Rocket, and they provide you a ton of support and they give you everything that you need under the sun. Essentially, you're plugging into an assembly line and you're there, and there are people that is the best place for them. There are other companies that are essentially, people have all kinds of names for them, like, hang a license, a broker, whatever, right? A broker, right. You hear the names.
Yeah.
And there are large brokers that essentially you're just coming in and working for them. You're hanging your license there. They provide you very little. You're still on the hook for paying your credit reports, those kind of things.
Yep.
And they let you plug into their system and they provide you very little support. And there are some people that is a great option for. If you understand you've got some of your own business coming in, you can go hang your license there. They can get you into multiple states, and that works for some people. I would say that industry as a whole is kind of cast a really wide net, and it's kind of like they're taking everything today And what I think you will see is some of those people will start falling out if a company's spending, a couple $1,000s a year to have you on their books and you're closing one or two loans. Like, they probably will become more selective and just start getting rid of you. But they also know that there's a refi boom coming at some point, and the person doing 2-3 loans today might be a 25 loan producer in 2025. And then there are some people that going out and actually starting and opening your own shop today, while things are a little bit slower, going through that grind to be able to control every single aspect of your business moving forward makes sense. There's not a right and a wrong. And people will ask me like, hey, John, do you think I'm getting a good comp plan? They're paying me 40 basis points. Well, some people would say, oh, no, it's terrible. But if they're paying you a $55,000 a year base salary, and you're getting 45 basis points and you're making $100,000 today, you're probably doing a lot better than a lot of the loan officers at 275. So people get hung up on what is the basis point. You need to look at your skill set in comparison to what you're being paid. Right. And there are people being paid 45 basis points that are overpaid based on their skill set. Right. So there is no right and wrong answer. There is a right answer for every person. And we try to have that conversation. There's almost as many people that come to me and I say, you're not really ready to open your brokerage yet. You've only closed 25 loans in your name ever, and you've never done a VA loan. Like, you're probably not ready to go and own your own business yet. Right. So we are pretty selective on who we bring on. I just don't want to have if I bring somebody on, I feel responsible for their success. And if I know they're not going to succeed, it does me no good bringing them through the system.
So walk us through, I mean, obviously we're going to keep it simple, stupid for all of our listeners out here, whether they're mortgage people or real estate agents or anyone in between. So let's say, I mean, you have an experienced loan officer. They've been doing this for 5 or 10 years. Maybe they've been working for a lender or bank or so forth, but they're like, I have my own book of business. That's the terminology in our world. They have their own book of business. They have their regular agents, and they just said, you know what, I just want to go out and do it on my own. I hopefully can earn a little bit more and do it my way. When that person comes to you, what are some of the, that basic conversation you're going to have up front? And then what are the steps that you're going to lead them over the next 30, 60 days to get out on their own? Yeah.
So, and that's the ideal person, right? If I get you or that person you just explained, I think that it's great. And a lot of times they've already thought it, right? They already know if you're a top 10% or the top producer inside of a company, especially some of these larger ones, a good portion of your salary or the income that you could potentially make is going to pay for, the marketing guy. It's paying for a COO. It's paying for all of these other places. So you're getting a haircut to kind of pay for the bottom half of the company. Right. So you are in a great spot. Or they've been, just unhappy with the current marketing campaign, or they need this particular program that they could get as a broker that their current company doesn't offer. So sometimes their hands are tied. So when the person comes to me that has that experience, feels like too much of their income or potential income is going to other people in the company and unhappy with marketing or decisions that are being made, or the fact that they just laid off a bunch of people that they didn't have to, that's the ideal person. And what we do, we've created a 4-step process. And the 4 steps are, we've got this rev it up phase where we talk about the who, the what, not necessarily so much the how. So we look at some basic business planning. Where's your business going to come from? If that all checks out and it makes sense, we then move on to what we call the entity, where that's where we go through and, set up your operating agreements, EINs, all the kind of basic legal stuff that you need just to be a business. From there, we move to what we call it's the NMLS phase. It's where we go out, we register your company, we help you get licensed. So it's everything that you need to do with licensing, policies and procedures, the compliance piece, submitting to the states, making sure that you have bonds, all those things that you need there. And during that phase, we're also working on websites, everything that you need to have a fully functioning kind of website. And then once we get that submitted, we go wild on making sure that we set up, and we use a couple of different systems today. We call it our cipher, which is kind of our proprietary thing. You think World War II, the cipher was this complex code that you had to crack to find out where the bombs were coming. Well, we kind of feel that we've cracked the code there. We call it our cipher. And what we've got is a couple of different solutions, but almost all of them are a point of sale, CRM, LOS, all in one. So you get one piece of software that you log on to. You can do everything that you need to from inside of there. We make sure that it communicates with any lead buy providers that you're going to have, your website, just so everything works. And then we've built out a whole processing flow that's specific to the mortgage industry. So we have milestones, especially being a broker, of, milestones of like registering the loan. You don't register a loan if you work at Racket. But if you're a broker, every file that you submit gets registered with a lender. So there's just some different dates and some different things inside of there. We wanted to make sure that every client had a portal to upload documents. So no documents were going through email. That's a huge security risk, especially if you're a broker of one, having somebody emailing their documents all over the place. So we tried to make a very robust, compliant piece of technology that everybody can use.
How you've been doing this a couple of years now, and even when we originally talked about it, I think it was back in, might have been June or so forth. It sounds like you've even taken another notch. Like every day, you're obviously tweaking, improving. Seeing another need that needs to be filled with these brokers. Because much like we just talked a few minutes ago about mortgage in a box in 1998, it sounds like you are trying to take that same concept and put a broker in a box. Am I correct?
I would love to put a broker in a box. It's just, it's very nuanced. Rocket actually has a thing that's called broker in a box. I believe that if you were to Google that, you would find that. But most of those companies, all they're doing is giving you like a check sheet, check off these things, and that's what they're doing. But what's become pretty apparent is at first, when we just launched somebody as a broker, well, just giving them all the tools, but not teaching them how to do it doesn't really help. So we've got a back-end system. So once we launch somebody, we actually have what we call as our broker foxhole. And what a foxhole is, if you think about it in war times, right? You and I are down in this, in this fight, and we're like keeping our heads down to not get shot. We're sharing cigarettes. We got all kinds of wild things happening there inside of the foxhole. So when somebody goes through our system, they end up in the foxhole. And the foxhole has a variety of components. We've got some title companies on board that help us with things. We've got a whole litany of marketing companies where there's different incentives, discounts. Maybe you get access to something that as a broker of one, you would never get access to. So we've got a bunch of different components inside of there, as well as there's weekly sales calls. You had mentioned the mortgage marketing animals, right? Where they're doing just ongoing training, different things. There's a whole lot of components that are in there that you get in addition to. We don't just turn you into a broker and set you free. We then put you into the foxhole for 1 year after that. And you
have a vested interest in their success. I mean, obviously the more successful brokers you're going to put out there, the more, your name is going to be out there. Like, hey, this is who I used, call John, right?
And to launch a bunch of brokers that all fail does absolutely no good. So I only want to see people do really well. And a lot of this just came on the back end. Multiple people have told me, John, why don't you just go and open one of those companies and just hang licenses? Why don't you do that? You'll make a lot more money fast. And that might be true, right? I probably could make more money faster if I was to go and do that. One thing that I've seen, right? I'm like closer to 100 now than I am to 0. So you like have this paradigm shift just of how you see things. And I have seen so many, I've probably hired well over 1,000 loan officers at different times. So I've hired 1,000, and I look at these people, and there's people that have been, top 10, 20% in their game for years. And I look at them now as the market shifts. They don't have a bunch of assets. They're not worth tens of millions of dollars. And I know a lot of brokers and company owners that back in 2020, they were making as much off of each loan officer that worked for them for the year as what the loan officer did. So like the income was the same, and they were able to acquire real wealth, right? I mean, Dan Gilbert's worth billions of dollars, not that he's even a comparison, but that was on the backs of a lot of people downstream. So I just really want to see people actually be able to acquire wealth, and it be something that they can hand off, to their kids. They could sell that company. Mortgage brokerages right now today, if you have a mortgage brokerage that's licensed in 20 states, you may not even be doing any business, that brokerage still has value. It's worth something. Where if you just bounce around company to company, you're making money for the CEO, the owner of that company, but you don't actually have any wealth that you've acquired or you've built up yourself. A loan officer is essentially, you're a cog in an assembly line, and your book of business may or may not even be your own. Right? You get to work it, but you're handing that off to somebody else. So I want to see people acquire wealth.
Here it's Halloween 23. Tomorrow's November 1st. We're, the market condition is evolving, daily. Everyone's asking everyone wants everyone's prediction. But in your teaching, your consulting, your coaching, this process, what are you seeing to be the greatest challenges, or just the, I guess that's the question. I mean, what are the greatest challenges of some of these, basically mom and pop brokerages that maybe might have, 5 to 20 employees? What are their greatest challenges right now? Besides, obviously, everyone wants more business, right? That's always out there. But their greatest challenges is surviving through this market as far as, marketing, leveraging their technology. What are you seeing as to be that great challenge?
Well, I think that the greatest challenge in those companies kind of sits, it's in their chest, in that a lot of them probably have more employees than what they need today. They have, they're carrying around people out of like goodness in their heart that probably they don't need. So that's one of the biggest challenges, is just the amount of business doesn't necessarily always add up to how many people they're carrying. And so that's a challenge then. And I know that a lot of those small broker owners, they think about that every single day. They do not want to lay somebody off or let somebody go because they're good people, even if they don't need them today. So I see that as their biggest challenge. It's a mindset thing, and that it's very hard. And I applaud those that continue to keep people on even when they don't need them. Beyond that,
primarily a support staff, or actually loan officers themselves?
I think it's both. And every company's different. I talk to a lot of, broker owners that, they've got 6 loan officers and they're doing, 25 deals, and they don't, and some of these loan officers were getting leads from the company. They were doing different campaigns, and those campaigns have just dried up. They're not driving the number of leads that they were in the past.
Right.
But they're a good person, right? You don't want to let go of this person that worked for you. They've been with you for 5 years. You were their team lead at Rocket. And then you started your own brokerage, and then they came over there and you've known them. You go to their wedding. Like, you don't want to let go of these things. So I think that one of the biggest on the broker side is that they're really good people running these broker shops for the most part. And they care about the people that work for them. And
that's probably true for any self-employed, small mom and pop shop, whether it's a retail store or, we all have passion for the people that work for us and work with us to do that. So that's a common challenge, I think, in any industry from that standpoint.
And real estate's the same place, right? There's real estate brokers that they've got so-and-so that does their social media. They don't really need them, but they just, I think that's just the American, right? It's just our way of reciprocating and like helping out the people around you. So that creates poor business decisions. And then on the backside of that, there's not a lot of there's just not as many leads as there once were.
Right.
It's harder to go out there. You used to be able to just reach out to, Lending Tree and just get flooded with leads. Well, that doesn't work the same. It's actually harder today than ever to buy Lending Tree leads because, right, they've increased the number of the minimums that you have to make, what your spend looks like. So a lot of those other areas have just went away, and it's more difficult to find leads. It's harder to get the number of conversations. And with the amount of property for sale across the country, the number of actual available listings is lower and lower. I had a banker out this weekend trying to get in with real estate agents, went to 5 or 6 open houses. All of the open houses had a lender already sitting in there. Go back 2 years ago, and you could go to 20 open houses and there was nobody in any of them. Right? It was just the real estate agent sitting, probably not even the listing agent, probably somebody that they had hired in their office to just go and sit in there. Right. So you can see that shift. You've got, top producing agents sitting their own open houses with a lender sitting inside of that open house. So just there's less opportunity today.
I am seeing here locally in Northeast Florida, some brokerages, well, there's some lenders imploding too, but some of the real estate agent wanting to open their own brokerage. Maybe they have a friend who's, been a loan officer for a while and they open their own brokerage. That this is one of the scenes, but the overhead that a broker I'm sure, it's one of the concerns I had when you and I spoke and talk about it. There's brokerages that are in lenders. Obviously they're, are able to offer benefits and so forth. Then I see this other brokerage side where, you are 1099, you're paying for your appraisals and everything like that. If you're trying to actually grow a team, it's one thing when you're all by yourself, you could 1099 yourself all day long, right? You're already taking on that responsibility, but now you're taking on this other overhead every month of, hey, if that guy only writes one loan, I still got to process that loan. I got my portion of the benefits for them. What is your recommendation? Because I imagine this is probably a question that you get with, these individuals wanting to open their own brokerage. How do you handle that kind of question? What do you advise them on?
Well, that's right. We go all the way back to that rev it up phase where we're
Mhm.
talking about what your business is going to look like. And the way that I like to look at that is, where do you see yourself in 6 months, 12 months, and then 5 years? Make your decisions up front as to where you want to be at, 5 years down the road, and set up your stuff to get to that point. The recommendation that I'm making for a lot of brokers and what they tell me today is, I would love to be at 5 to 10 bankers in the next 12 months. But they're starting out, in almost all instances, it's starting out with them and maybe one other person.
Right.
So it's pretty simple to start out as yourself, one other person. Spend the next 6 months knowing that you're tweaking and building systems to be able to easily onboard somebody and have a duplicative, right? So like, it's duplicatable. If you set that up, then it's relatively easy. And then you have to pick and choose too. Like, certain states will allow you to have 1099 employees. Other ones require that you be W-2. There's a whole compliance situation there. I'm not an attorney. I'm not a compliance person. We match you up with the compliance company in all instances. I don't want you flying blind, but I think you have to look at where you want your business to be and then start game planning from day one, what that future self and your future business is going to look like. But in almost all instances, you're better off, probably going a little more robust. Don't try and just fly with the bare minimum, because it's going to leave you hanging down the road.
Well, tap a little bit into compliance, because that's kind of it's like insurance, your liability, compliance, all wrapped into one. You're going out on your own in a very regulated industry. You and I know, I've heard some crazy story the other day from a very reliable person where she actually hired somebody from a brokerage that the stories she was hearing from them where, you're the boss is in the back making up leases, making up, fraudulent documents to get loans, through and so forth. You got to watch where you step into, who you hire, for example, and so you're not exposing yourself, because obviously you can be taken down very quickly and spend some time behind bars. Where do you go? Where does the resource for compliance for someone, that you're coaching, where do you refer them to, and how do they take over?
So there are a variety of different, right? There's companies, strategic compliance. There's a bunch of companies out there that offer kind of compliance in a box. They're going to give you everything that you need as a broker on day one, right? You have to have policies and procedures in place. You need to have, there's certain laws like anti-money laundering, Banker Secrecy Act. There's these certain, 3 or 4 things that you must have in place to go ahead and open your brokerage shop. A lot of people use ChatGPT, believe it or not, and they put together their policies and procedures, just typing it in there. They're looking at saving. This is again where you're stepping over dollars to pick up pennies. You're saving yourself a few $100 of doing those things on your own to potentially get an audit down the road that costs you tens of thousands of dollars. So 100% of the people we deal with, we put them in touch with a compliance person. We actually handle that. If we're doing it for you, we put it all in place. We set it up with you. We've got there's a company, Mortgage Manuals. That's fantastic. That's who we've been using primarily. And they put together a great program. They have great support. They're there with you along the way. And you sign up for them for the package, and then you pay a small monthly fee just to have them ride along with you. And you've always got compliance help there. And they're very knowledgeable. They've done like 4,000 plus brokers. So they've got a really large network there.
Mhm.
But it's one of those areas you don't want to skimp. It's kind of like, don't skimp on, if your car, like, put good tires on it if you drive in the snow. Wear your seatbelt. There's basic things that you can do to get you a long ways. And that's definitely one of them. And then just, don't do anything that would land you in jail. Closing no one loan is worth, losing your entire livelihood. You get caught with fraud once in the mortgage industry, you're like banned for life. There is no second chance or no mulligan. So just not worth it ever. I think most people realize that, but they're still.
When you mentioned earlier, common client you have, they're looking to hire 5 to 10 loan officers in the next year. With such a small shop and limited resources, like a training department, for example, what do you coach them on in the sense of hiring? Because I do, again, some of these places that are imploding, I am an NMLS consumer access nerd or whatever you want to call it. I go on and I look to see where some of these loan officers have come from, especially people I don't know. I've never seen them before. Go, who's this person? Where they come from? And I'm seeing some of these shops that are now imploding. If you go back and look in the last 2 years, the loan officer they're hiring and have majority on their staff have no experience whatsoever other than maybe the last year or two. And if they've written a couple dozen loans, when you're coaching that person that wants to get the 5 and 10, when it comes to hiring loan officers and weeding them out of who you should hire, what advice are you giving?
Well, I don't make hiring decisions for people, and I've done it all kinds of ways.
Mm-hmm.
Right. I mean, if we go back to what we did, I mean, the system you ran through when you went to Quicken, you probably came there right out of college, no real idea of what you were doing.
I'm too old for that.
Well,
I'd be more in a midlife crisis, but a lot of the other bankers were, yes, they were shortly out of college, young 20s.
You still got pushed through some academy.
Yep.
You got rah-rah calls. You were, live calls, getting a first credit report pulled. They trained you in a specific manner, and they put a lot of resources into you, right? They dumped tens of thousands of dollars to get you from the Tracy Hayes that showed up on day one to the Tracy Hayes that hit the floor.
Right.
Ultimately, right, the Tracy Hayes that, became senior, whatever, like as you move through those different categories, there's a lot of investment there. There's nothing wrong with, I know brokers that bring in brand new people. They bring them in 2-3 at a time. Just understand it's a very large commitment. If that's what you want to do, is hire kids right out of college, or, people looking at making transitions into the mortgage space. Just, if that's what you want to do, that's okay. Just make sure that you're not doing it, flying by the seat of your pants. You put together a training curriculum. That's 4 weeks. You get them licensed. You do the things that you need to get them where they're at. You just want to make sure that you have a set of standards. I believe there's a saying, I don't know who it is, some famous general, but the standard you walk past is the standard you accept, something along those lines.
Right.
So you have to have a standard of what your employee looks like. And if you know that, you can hold them to that standard and you don't drift below there.
Mm-hmm.
But I think that in today's world, it doesn't make a lot of sense to hire a brand new person, seeing how there's tens of thousands of very experienced, seasoned loan officers sitting out there. And I do believe going and looking at the NMLS is a great place. I love it. My NMLS number is 6399. So I have 4 numbers in mine. Most companies have more. So for me, it's a great place. Like, go check out my NMLS number and then look at the kid that was playing college football last month. That's now your mortgage expert. Like, who do you want to do business with? Like, I love that. But again, if I had an NMLS in the 2 millions, I may not. So I do think you have to look at the quality of the people that you're hiring. Have they done business? Do they have a database? Do they come with any baggage? And will they fit into your system? And from there, it's, there's some trial and error, but you want to make sure that first and foremost that you can work with those people and that they match your model. Don't bring somebody in that's been all call center to go out and try and figure out, how to get real estate agents, because they're going to struggle for 3 to 6 months unless you have a program in place for them.
What's your opinion? Carl White is big when you go to his thing on doing a disc assessment, because there is a difference between a loan officer, especially in the retail world, going out and talking to agents, someone who's willing to do that, stand up and do lunch and learns and talk to a group of people, that kind of thing, versus that person who might be that call center or be a loan assistant or processor. Would you agree?
I think that they all are capable of doing it. It's just, what skill set do you possess today? Mm-hmm. So I've never met somebody that was a, call center person that wasn't able to learn and acquire those skills. But today you can go out and just hire the person that already has the skills, so you don't have to train. And I think that that's a great thing. I know Carl White also talks about, looking at like doing the same thing on the agents that you would go out and talk to. Right? People spend time chasing down an agent that's going to do 2 transactions a year. That was in a boom market. Like, don't do that. Well, don't hire the same loan officer, or hire somebody that's not going to get you the result that you want. I've made that, and I know that well, because I've made that decision. That I've made a lot of poor hiring decisions throughout the last 25 years.
Oh yeah. I mean, yeah.
Some great ones.
I got a couple more questions. We're right here at an hour. So we'll spin it down. Since you've been doing it and really getting deeply involved in existing, I imagine you're talking to probably some existing mortgage brokerages. You're talking to people who are actually starting from zero, maybe still working for a lender and going, hey, how can I evolve out? So you've got 2 ends of the spectrum. But since you really started digging into this a couple of years ago and having these in-depth conversations, how have the challenges, because we talked about what is the challenges today a few minutes ago, how has the challenges changed over the last 12, 18, 24 months from what you or that was the actual challenge 24 months ago to what obviously the market conditions today? How has that evolved in your consultation?
Well, it's gotten more difficult today as rates just keep going higher. There's very little refi. So it's a finite amount of purchase business. There is cash out refi happening. Believe it or not, there's actually quite a bit of it happening out there. But that challenge is just, there's a lack of people out transacting today. So it's a lack of business. It's probably the biggest challenge, and it's continued to get worse. I think that most people, myself included, I would have thought, if you were to go back a year ago, I thought by this time we would have seen our first Fed rate cut. Just where things were at, they apply enough, to it that I would have
Habib
thought,
said that in the springtime that we would be like back to low 5s in the summer.
I remember being at MBA annual last year in Nashville and people asking me, and I said, August, September 2023, we should see our first Fed rate. But we've also had, I can make all kinds of excuses, right? We've got weird things. There's wars, there's all kinds of things, hyperinflation, but I was kind of dead wrong on that. I still believe it's coming. I won't be wrong that a Fed rate cut is coming, just as to when. So, and I think that a lot of people kind of planned on the tail end of this year being better. And when your expectations aren't met, so if you're planning that rates are going to be at 5% at this point, you make decisions, in the past that set you up for rates being at 5 today. And then when rates aren't at 5, well, you didn't allot for as much as you need. You go out
I had someplace. A friend of mine, and hopefully he listens to this. I doubt he's listened to it live, but he's running a very great brokerage, probably one of the best in Northeast Florida, hiring, he's advertising, hey, all the support and so forth, because he told me, in his opinion, that because it's going to be an election year, that the rates are going to drop. So I assume he's actually trying to build in, we're going to have some refi business. And obviously if rates drop, we should, there's still a demand for homes, especially here in Florida and so forth. But my prediction, I told him from the political standpoint, this isn't the same Democratic Party this isn't John F. Kennedy's Democrats. These are a different situation. And I think we talked about inflation. I don't think we're getting the true numbers. I think they've been, padding the numbers and telling us it's better when really it hasn't. That's why we haven't seen the Barry Habib rate drop. These guys thinking it's going to, we're going to be in the fives by August. We haven't seen that because it's not as good as some want to believe it is. We all want to believe it is, but really it is. And it's going to take some real, real hardcore, sticking to it and so forth, which leads me into marketing. That's actually, this is a question here I've been wanting to ask, and we put where do you step in as far as marketing? What are you coaching and consulting on that, especially right now with today's current market condition?
Yeah. So, and I'd love to get back to I also am a believer that the stats, what we're hearing is all right. It's made up. You have a headline number and it's right. Whatever you want to have it sound good. I've seen blurbs that the economy is the best it's ever been, but you can see credit card debt, right? Like going up. So people are spending more and more on credit cards. Personal savings is dropping. And you'd think that there's millions of jobs. What are these jobs? Who's taking them? Are they actually real? So I do believe that there's some craziness happening out there. And if it gets turned around, so let's say the economy gets chugging along really good again and all this pain goes away next August, September, October, heading into an election, often when things are going well, people don't want to make a big change. So if it is going well come next November and the economy's turned, I think that bodes well for the party or the people in power today to get reelected. So I think there could be some political,
I don't think
well.
this current administration knows how to do that. So I'm not betting on that one.
I am going to just not touch politics, but let's just say that I don't necessarily disagree, right? We borrow money from one country to give it to another daily. So there's just a lot of like weirdness going on out there.
Mm-hmm.
But as far as marketing goes, what we do is we set up a marketing plan. And the way that we look at our marketing plans is we look at it in 3 months, 6 months, and 12 months. And we're just looking at what kind of things can we do, the highest impactful things we can do over the next 90 days to ultimately generate business in that 4th month. So any of the activities we're doing today is what can I do to get the highest rate of return for the money that I spend today for 4 months down the road. And we're constantly really the 6 and the 12-month piece of our marketing plan. It's actually right. It's a whole document. It's living. It becomes part of something that we look at and review quarterly, but it's the 12-month piece really doesn't matter because you get to the 90-day mark and you make tweaks and then you're looking at the next 90 days. And then you're looking at the next 90 days. But we've been able to do a couple of different things. So one is people have closed clients. People have people in databases that they've talked with. So that's going out and really leveraging your database, leveraging what you're doing there and making a concerted effort. There's a couple of different programs that we will enroll people in as far as like a rate watch program. There's things where you can get all of your clients in your database. You can opt them in. They can receive rates on their specific program once or twice a week right in their email. So when rates do drop, you're top of mind. Or when something comes up, friends, family, anyone else is looking, you want to stay in front of your own database that you've done business with. The same with things like, there's things like HomeBot where people can see their values in different things. So anybody that's sold. So putting some definite technology pieces on the back end to retain your closed clients and every lead that's come through your way. Very robust on the CRM side. So allowing a CRM to do a lot of things for you. Too many people have CRMs that they don't even know how work.
Yep.
Or they don't do anything with them.
Yep.
Now your CRM should be touching all of your clients. I would say at least 12 to 24 times per year. And it should happen without you doing a lot of effort. And the CRM can reach out to 10,000 clients as easily as 2 clients. So it requires the same amount of work. So just making sure that those things are in place.
100%. I've worked for lenders and every one of them's got a CRM. Obviously your real estate agents do. These CRMs, the technology in them is tremendous. All the things that they can do. The loan officer, would you agree, typically doesn't have they're trained on all this stuff, and then they're like frozen, analysis paralysis on, what should I do? I, talking to different lenders all summer long, as you know, what I've been doing. One of the things I did was talk to the marketing department and said, how are you going to take my information and leverage? Because they have marketing departments and they have the CRM, but they're not putting the rubber to the road. And they're waiting for the loan officer who, unless you sit down and train them, but if they're sitting in there working their CRM and on how to run campaigns, they're not out talking to real estate agents. And would you agree that having someone who's an expert or becoming an expert in the back end to leverage that CRM, especially now, because the CRM, emails don't cost you anything. Like you said, these regular updates and so forth, creating newsletters for different communities, or, if you have a mailing list or, type of thing, to really, some of these larger companies, to have your marketing department make sure your CRM is burning its wheels. You know what I'm saying? It's constantly churning out great information to stay top of mind.
Yeah, I think that one suggestion, and I've suggested this going back the better part of 10 years now to every loan officer that worked for me. I suggested, even when they were working for me at different companies, I suggested that they all maintain their own independent database outside of the company. Multiple companies that I'd worked for in the past, they're out of business today, right? They no longer exist. You could have had that database of all your close clients. I mean, imagine how many people you would have if you go back to, in your database, had you stored every single person all through time. Actually made the recommendation to people recently, LinkedIn, request every client that you speak with, send them a connection on LinkedIn. It's a great place to communicate. It's virtually free. It's a CRM built that's yours, that if you do go and leave, you can move it someplace else. Mm-hmm. But back to what you were saying, I was working with this company recently, and they have Boomtown, which is this thing for real estate agents. They have Bonzo for their CRM. They pay hundreds of dollars per month for seats for these systems. They couldn't get them to talk to each other. So the loan officer was actually going in and making calls in one, then notating in another. They were like manually typing across two systems. And if you think about that, like, does that cost them one closing a month? And as a broker, a closing probably makes you somewhere, call it $4,000 to $6,000, just on average, that you would take home as a broker. So if that's 10 of them a year, it's 50, 60 grand, because you can't get these things to sync up and you're paying money for them. So I do believe that it's a miss by so many companies, or the company sending out stuff that's so generic, it doesn't really help you. I recently did a video that I think I put on like LinkedIn and stuff about don't talk to strangers. We've been told since we were a little kid, don't talk to strangers. If you're not personally out doing social media, doing video, those kind of things, you're really a stranger in the market. And you may as well be like, right, you're the dude in the panel van. So like, I go and look at you. I know if I was referred two people in your area, you and somebody else, and I go and do just a quick little Google search, I'm going to feel more, I'll know who you are based on what you've done social media wise than the next guy. You'll probably get my call 100% of the time. And of the two cards, I'm going to take yours and go with it. Right. So, and that costs nothing. It doesn't cost money to be on social media and to not be a stranger inside of your community. So
I have said 1,000 times on the show, when they're watching us right now in a screen, but your brain actually doesn't differentiate whether, you and I are, whether you're sitting right here with me in my office. It doesn't differ when you're watching a video. And when you're on the social media and you're seeing someone speak, or you're seeing their facial expressions or the imperfections of that we all have, you're bonding with that person, and you feel you have some sort of relationship psychologically in your mind versus the person who's not doing the videos.
You've had people that you go and, I went to a couple of the Jocko Willink things, and I'd seen so much content of Jocko's by the time I got there, I felt like I knew him. Like he wasn't just a stranger. Like I knew this guy. I'd been watching his social media forever. So I do think that people underestimate that. I think that short form video is just huge right now as well. Like you can't just be doing, just static things. I think that you've got to be doing some video. We actually have some packages that I've put in place where somebody can get, I call it kind of my like social starter package. But for a couple $100 a month, you can get, 4 short edited videos. You can get a social media post a day. So 5 of them a week. And it costs you a couple $100. It's turnkey and it just works simultaneously, right? Every single time. It's putting a system in place, and systems are what rule the world. So if you don't have a system, you're probably not going to get far.
And John, would you agree? You have to understand it is a long-term play. You're not going to do one video and all of a sudden your phone starts to ring.
Yeah, I tell people social media is not even about, you will not get business from social media. What you're going to do though, is you're not going to lose it. So especially somebody starting out, if you just start posting, you just start a LinkedIn or an Instagram today, that's not going to drive business. Maybe it will, but you're not going to lose that potential referral that would go someplace else. Or your aunt doesn't come to you because they don't want to bother you. But if you're a loan officer, you need to be posting almost like certain things every single week.
Yeah.
Every single week, you need to let people know that you're available to look at loan estimates and provide a second look. If they want to shop their rate, like, come bother me. You're my friend. I trust you. You're connected to me for a reason. Come, let me take a look at it. It's not a bother. I'll let you know if you're getting a good deal. If you are, great, move forward with that. But you've got to make that invite to people to come to you. They won't proactively.
Excellent advice. Let's wrap it up. Predictions. What are you preparing? What are you advising as we're starting to end the year and you're starting to see, these trainings on, business plans? The agents are getting together and creating their business plans within their brokerages. So you're seeing that kind of stuff popping up. What are you advising, preparing as we go into 2024? And what maybe some feedback that you're getting from some of your more experienced brokerages and how they're preparing as we want to predict. We'd always like to say, yeah, rates will be 5% by June, but we don't know that's going to happen. So how are they preparing for 24? How are you preparing for 24?
I think that playing a long game, making sure that all of your systems are dialed in. And I think that really where you need to be today is there is going to be a boom that happens. Maybe not a boom where it's like rates drop off of a cliff. I think we're going to get kind of a down escalator where we're going to see this steady improvement in interest rates. And some of these clients that are closing on a purchase today, you might get to refinance them multiple times. So what I'm advising people is this, that we know rates are going to get better. I don't know when. Plan on making it today and don't go about it from just a surviving standpoint. Making it means making money. So do those things that you need to. And that may mean that you as an individual is doing a lot more physical lifting than you'd like to. If you like to just run people and you just want to like manage people, well, you may have to get on the phone, and the best management you can do for them is make 100 up on dials yourself today, calling every close client that you have to, wish them a happy Halloween. So it's doing the activities. So that's one thing that I'm just through the first quarter, just be prepared to do a lot of work. And make sure that as you're doing that, you're setting aside time to get everything optimized. So when rates do drop, the bandwidth, like your bottleneck is not your systems. So just get all of your systems dialed in. It doesn't matter what system you use, what CRM, just make sure that they all work. So get your systems dialed in, and then also just cost cutting things. If you're spending stuff, if you've got money that you're outlaying every month on things you don't use, go through, clean up the business as best you can, and just take advantage right now of the downtime. If you're slower, just because you're slower from a business standpoint, doesn't mean you need to be slower from an activity standpoint. You can be really fine tuning your business today to where as it moves forward, it will be, better.
Run mean and lean.
Run mean and lean and acquire skills. The more skills you have, the more you will be able to do. So you understand how to do a podcast, right? That's a skill that a lot of people don't have. If you're not writing loans today and you want to do more business in your area, do a podcast similar to what Tracy's done here. You can do this in every community. So people need to acquire skills, and they need to just keep looking at the long game, and that it's going to get better. I do think that we will see rates traditionally from the time they stop hiking until they stop cutting is 6 months. A lot of people are predicting that they've made their last hike. Who knows? But if you look at that, that would put us somewhere end of, Q1 into Q2 next year, where we'd see an interest rate, potential cut. And once that happens, I think that you're going to see a lot of just things start moving, because a lot of clients right now are not listing because they're afraid they won't be able to find a new house, or that rates are too high. So as they start coming down, I think we're going to see more inventory and we're going to see more business. And you want to make sure that you're prepared at that time to be able to capitalize on that market.
And I mean, from what I'm hearing from, talking to bankers, talking to the people that I respect that are a lot smarter than me, as far as, 6 to 7% is really the cost of money. And if you think you're going to wait around until it clicks over to 4 before you buy, it's not going to be that. I think, when I first started at Quicken in 2005, right up until, actually when I bought my house, we locked in, it was December of 2008. It was like 5 3/8, and we thought that was really low. And obviously the market continued to drop at that time. But for for those 3 years prior to that, if you were able to get 5.875, that was like, oh my God, right? We were constantly at between 6 and 7% there. And I think I remember someone posting an article in October of 2008, 6.25 was your 30-year fix. And that's, so you start to see that get down there, it's time to buy. Like you said, you can always refinance. So, yeah.
Yeah. I mean, you buy when you find a house that you like.
Mm-hmm.
Yeah. There will be opportunities to refinance. Not buying because of where rates are at is kind of silly. And we've seen, 7-8% appreciation this year. Anybody would have been better off buying last year this time, because home values are only going up. You've got a lot of the major equity funds raising billions of dollars to purchase single family homes to turn into rentals. So if BlackRock wants to, or Blackstone, or whatever of the blacks out there, wants to buy $40 billion of single family homes, it's not going to bode well for the individual as far as home values, going down. So home values going up is great. We want home values to go up, and now's a great time to buy.
All right, John, I'm going to wrap up. I've got, obviously, John Jurkovich is on LinkedIn. Very extensive LinkedIn, tells you a lot about him. Your website, themortgagebrokerbuilder.com, and these will be in the show notes of the audio podcast. John's email is simply John with an H at CEO1440.com. You're also on Twitter. We'll have all your social media contacts in the show notes for those who are listening on any of the podcast platforms as well. John, I really appreciate you come on. Is any last thing you want to throw out there for us?
No, just I've been watching what you're doing. Awesome what you've done with this podcast. Love to see that you've found a new home out there. And crazy to think that I've known you for, 15 plus years now. Right. I don't feel that
I will
old,
say this. I remember, and it was you had your division. We were over in Southfield, and for whatever your team had won the box in the Tiger Stadium there. And you had some extra tickets, and I was the first one to run into your office and say, I'll take those tickets. And we spent the evening with your team there, your leadership team, in the box watching a Tigers game. I always remember that. Brought a good friend of mine with me. So.
No, those were good old days back then. You look back and just, so much. We knew so little, yet we thought we knew everything. But it's all, everybody that came out of that company, there was a great foundation inside of that whole Rocket, Quicken culture. A lot of great things came out of there. So
I always tell a lot of people, and if you're a broker on here, you know who UWM is. There's a lot of people over there that were there at that time when you and I were at Quicken and Rocket that actually have gone over to UWM and have that successful mindset and run that company very well.
Now, Metro Detroit is filled with a lot of mortgage expertise.
10-4. John, I appreciate you.
Hey, thank you. I appreciate this.